Bitcoin's up like, 46% ARR every year for the past 4 years. So, and that varies, but anywhere from 45 to 55% is the ARR for Bitcoin. So I think, okay, so 50% is my risk-free return. So are you going to give me a proposition which is risk-free better than 50%? And like,
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. Recently, Michael Saylor, the executive chairman and co-founder of MicroStrategy, presented a noteworthy keynote at the H.C. Wright Annual Global Investment Conference, titled The Digital Gold Rush. In this presentation, Saylor expressed a positive outlook on Bitcoin, framing it as a pivotal asset for institutional investors and others aiming to diversify their portfolios while protecting against the ongoing risks of inflation and the depreciation of fiat currencies. Saylor highlighted that Bitcoin constitutes a notable advancement compared to conventional asset classes, such as prominent stock indices like the S&P 500, gold, high-yield bonds, and a range of commodities. He recognized monetary inflation as a significant obstacle that investors need to address in order to safeguard and enhance their wealth in the long term. In light of the current discussions among proponents of stable currency regarding the adverse impacts of inflation, Saylor observed that a significant number of investors still lack awareness of the relationship between inflation and their investment returns. Investors frequently focus on the apparent profitability of their portfolios, often neglecting to consider how inflationary pressures can erode these gains. For instance, given an average annual inflation rate of 13.3%, numerous conventional investments face challenges in preserving their purchasing power. Saylor highlighted that only a limited number of asset classes have the capability to consistently exceed the prevailing inflation rate, emphasizing the critical need for investors to acknowledge and tackle this concern. Furthermore, Saylor emphasized the limited duration of numerous fiat currencies, which exhibit significant susceptibility to inflationary pressures. He referenced instances like the Turkish lira and the Venezuelan bolivar, both of which have undergone significant devaluation, typically within a time frame of less than 5 years. Conversely, the US dollar, which holds the status of the world's reserve currency, is projected to have an estimated lifespan of approximately 14 years before experiencing substantial value erosion. Unlike fiat currencies, tangible assets such as land and art may exhibit extended lifespans. However, they do not match the distinctive advantages presented by Bitcoin. Saylor posited that Bitcoin demonstrates exceptional durability, with a potential longevity that may surpass 1,000 years. This enduring characteristic establishes Bitcoin as a unique store of value in an environment where conventional assets face growing risks from inflationary pressures. Michael Saylor's insights provide a compelling argument for Bitcoin as an essential element of a diversified investment approach, especially in a landscape marked by increasing inflation and currency depreciation. His focus on Bitcoin's potential as a durable and robust asset prompts investors to reevaluate their portfolios in the context of current macroeconomic trends. With the ongoing erosion of purchasing power due to inflation, Bitcoin's attractiveness as a protective asset against these economic risks is becoming more evident, positioning it as a vital option for both institutional and retail investors. And lots of things Michael Saylor discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
The S&P is up 66%. So Bitcoin is like 6x. Bitcoin is 388 versus S&P 66. And gold's up 25%. And silver is up 3%, and bonds are down 16%.
Yeah.
Yeah, so the interesting thing, of course, is no one would have thought that No one would have thought that MicroStrategy could outperform all 500 members of the S&P 500. I didn't even think that. In fact, we didn't even realize that. That snuck up on us. It didn't. Our benchmark wasn't that. Our benchmark was Bitcoin, right? So we were actually just trying to keep up with Bitcoin. So I think you could have guessed that Bitcoin would actually outperform the S&P. And our initial goal was, how do we get to the point where our company's market cap tracks Bitcoin's market cap? But along the way, we levered the company, and the only way to beat Bitcoin is more Bitcoin, right? And and that's why every time people offer you, they pitch you all these business ideas, right? And they're like, well, do you want to invest in this business or that business, or do you want to invest in this real estate? And I say, well, Bitcoin's up like 46% ARR every year for the past 4 years. So, and that varies, but anywhere from 45 to 55% is the ARR for Bitcoin. So I think, okay, so 50% is my risk-free return. So are you going to give me a proposition which is risk-free better than 50%? And of course, no one's got a proposition that's risk-free better than 50%. So then the question is, well, how the heck are you going to beat better than Bitcoin? And the answer is, the only good idea is borrow a bunch of money for 5% and buy Bitcoin with it. Right? If you can borrow money for 0% or 1 or 5 or 10%, and you're buying Bitcoin and it's returning 40 or 50%, then that's a good idea. So I think Bitcoin's a good idea. I think different ways to securitize or lever Bitcoin, some are bad ideas. Like, for example, trading 20x leverage on Binance on Saturday night. That's not a good idea. Trading on FTX, on the crypto exchanges with like mark-to-market massive leverage is not a good idea. But, if you can take a 30-year mortgage at 3% interest and buy Bitcoin with it, and that's a good idea. And maybe you remember, you lived through the many epics. The last epic is about a 45 to 50% ARR. The previous ones were higher.
Bitcoin is presently positioned 16% above its recent low of $52,546, recorded on September 6th, prompting speculation among experts that this reversal could signify the onset of a movement towards new all-time highs. The regional pricing framework has reverted to a bullish position, especially following Bitcoin's closure above the prior September peak and the formation of a higher low. Independent analyst Gel noted in a September 17th post on X that Bitcoin's recent peak of $66,670 on September 13th exceeded the prior high of $59,800 established on September 3rd. The observed pattern indicates that the market's momentum possesses sufficient strength to surpass the critical resistance level at $65,000 and subsequently address the supply congestion around the prior all-time highs. In alignment with the prevailing bullish sentiment, the pseudonymous analyst Allstein Trader reinforced Gel's optimistic outlook, indicating that a breach of the $65,000 level could pave the way for achieving new record highs. This is consistent with extensive technical evaluation, indicating that if Bitcoin breaks through this resistance level, it may experience considerable upward momentum. In the current market analysis, notable cryptocurrency expert Don Crypto Trades has identified that Bitcoin is positioned close to the median of a descending parallel channel, with its price hovering around $57,923. A further 15% increase from this point would elevate Bitcoin beyond $66,000, underscoring the significance of the $65,000 to $66,000 range for sustaining upward momentum. Data from Glassnode reinforces this assessment, showing significant short interest building up near the $60,000 mark. The liquidation heat map indicates that there are around $401 million in ask orders at this price level, implying a considerable level of resistance in this area. The aggregation of orders may present difficulties for bullish traders aiming to elevate the price. CryptoQuant has reported an uptick in the Futures Sentiment Index since the start of the year. This metric is significant, as it has shown an 89% correlation with substantial price increases during 4 prior market cycles. This trend suggests that heightened bullish sentiment among futures traders frequently foreshadows upward price movements in Bitcoin. The recent price movement of Bitcoin indicates a possible transition to a bullish trend, with experts pinpointing critical resistance levels and patterns that may support additional upward momentum. Given the substantial technical indicators suggesting a potential breach of the $65,000 resistance level, along with robust sentiment metrics supporting this perspective, Bitcoin seems well positioned for possible upward movement. Investors must stay alert and closely observe these developments, as the cryptocurrency market is in a state of flux and offers potential avenues for strategic positioning. Let's get back to Michael Saylor interview.
And I think it's the law of large numbers says that as Bitcoin approaches the market cap of the S&P index or the market cap of all the equities in the world, it'll start to approach an ARR and a volatility which is lower. I don't think it'll ever get to the performance of S&P. I think it'll always be better than the S&P index. And I think like right now, the ratio is like 46% for Bitcoin versus 12 or 13% for the S&P. So it's like 3.5x performance, and it's like 2.5 vol. So the Sharpe ratio is higher, right? There's a higher Sharpe ratio of the S&P. The performance is much higher. And I just believe over time, Bitcoin will converge toward the S&P times 2 and 50% more volatility in the S&P and 2 times performance, or if the S&P gives you 12% a year, then Bitcoin ought to be 20% a year. And so that being the case, we did this Bitcoin 24 model, and the 24 model is a 21-year model, and my base case is 29% ARR for the next 21 years. And at 29% ARR, you end up hitting $13 million of Bitcoin in 21 years. So that being the case, coming back to every pitch I get, okay, well, you have a pitch. Can you guarantee me 29% ARR risk-free? And another way to say it is, that's the risk-free rate. So can you give me 39% with no additional capital required for the next 21 years? And if so, it's still not a good idea because it's a distraction, right? Right? It's still a distraction. I'm taking risk, but it's maybe an interesting idea. But of course, as soon as you set that as the cost of capital, 29% risk-free. I mean, the risk-free fiat rate right now is 5%, right? Or actually after tax, really the risk-free rate has got to be the after-tax bond yield. So maybe it's 3%. So it's 3% if you think conventionally in fiat terms. But if you're thinking Bitcoin terms, it's 29% for me. You can have a different forecast. But it's very clarifying, right? Because as soon as you actually set that, you think, well, there's really nothing that interesting to me other than what's interesting is companies that can raise capital to buy Bitcoin. And intelligent leverage ideas like raise $1 billion for 0% interest and buy Bitcoin with it for 7 years. Like those ideas are interesting to me, but there has to be Bitcoin on one side of the idea, and the other side of the idea needs to be an arbitrage of the extremely cheap fiat interest rates.
This week, a notable event is set to influence macroeconomic fluctuations, the U.S. Federal Reserve's expected interest rate cut, representing the first decrease since March 2020. The formal announcement regarding this decision is scheduled to take place at the Federal Open Market Committee, FOMC meeting on September 18th. The precise magnitude of the cut remains a topic of ongoing deliberation. However, market participants have already adjusted their positions in anticipation, with discussions focused on a possible decrease of either 0.25% or 0.5%. This decision carries several significant implications. On one hand, risk assets such as Bitcoin are anticipated to gain from the heightened liquidity that generally follows policy easing measures. The influx of capital has the potential to enhance market dynamics and may lead to an increase in asset valuations. Nevertheless, there are reservations among experts regarding the similarities to past financial downturns, especially the 2008 global financial crisis, indicating that these rate reductions could signal more profound economic challenges rather than simple optimism. Jacob King, the CEO of the crypto newsletter WhaleWire, pointed out in a recent discussion that significant reductions in interest rates have typically occurred before economic downturns. He posited that these actions indicate a governmental apprehension regarding the deterioration of borrowing, spending, and investment activities. The prevailing economic metrics, including increasing unemployment rates, a downturn in housing starts, a decrease in home sales, and a contraction in economic activity, closely mirror the cautionary signals observed in 2008. Additionally, he observed that the current federal funds rate chart mirrors trends seen in 2007, which raises concerns regarding possible economic instability. Several market participants exhibit a positive outlook on Bitcoin's future, especially in light of its strong correlation with the prevailing global liquidity conditions, which are currently experiencing an upward trend. Renowned trader Rickus highlighted in his assessment that investors anticipating rate cuts to lead to a sell-off in Bitcoin might be misjudging the situation. He posited that a stable stock market devoid of panic could render initial rate cuts potentially bullish for Bitcoin. Traditionally, initial reductions have correlated with price escalations influenced by the overarching economic environment. While the Federal Reserve's interest rate cut is expected to enhance liquidity in the market, the overall economic ramifications are multifaceted. The likelihood of a heightened risk appetite among investors may positively impact assets such as Bitcoin. Nonetheless, the historical context indicates a need for prudence, as reductions in rates may occasionally foreshadow economic contractions. It is essential for investors to stay alert, observing the short-term market responses to the FOMC decision, as well as the fundamental economic indicators that may influence the long-term prospects for Bitcoin and the broader financial environment. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.